afternoon. How are you doing? Happy Wednesday, America. We're back in the afternoons. How are you doing, Mark? Paul, Soul Trader, Evil, Mumo, Virginia, how are we doing? So, another strike by the Chinese on the US. 84% on US goods. Oh my God. Doesn't stop, does it? My head's hurting. I feel absolutely exhausted trying to trade this and understand what is going on. It's just a minefield at the minute, isn't it? Morning, afternoon even. Got to say, weird. Afternoon, Mumo. Peter, Ryan, John, Dennis, how are you doing? So, yeah, so basically this afternoon, or just about lunchtime, additional tariffs of 84% have gone on US goods by China, which kicks in tomorrow, midnight. So that obviously has put the ball back in Trump's court now regarding China. The EU have discussed what to do with the US tariffs. We haven't had anything actually come out of that yet. They haven't actually said what they're going to do, but they have had this meeting. The USTR is going to ease charges on ships carrying agricultural imports, whatever that means. But there's a bit of information come out about from the US Treasury. Apparently, the futures market is now saying it's going to be June, not May, for a cut in interest rates. Changes every 5 minutes, doesn't it? 6% chance that the Fed will start interest rate cuts in May. That was at 1:59, and at 2:33, 34 minutes later, it's likely to be June, not May. So literally within 34 minutes, they've decided to change the interest rate futures from May to June and back again. Yeah, this is how fast this thing's moving at the moment. You cannot believe anything you see. Literally, the market just goes up and goes down, and it's absolutely got no logic to it at all. So crazy. It's like literally exhausted mentally by trying to get into trades. They look like they're working, and then they turn around the other way, and then they go the other way, and they look like they're working, and they come back. It's like trying to trade ranges, but there is no range high or low. It's just utterly useless, this market at the minute. Spain's comment about aligning more with China would be like cutting your own throat. Good language, US. So I'm going through the news, by the way, in case you hadn't noticed. Afternoon, Marco, Dennis. I think I said hello, Dennis. John, can't remember where I got to. Traders see 6% chance of federal cut rates in May. We know that's just moved back to June now. Bar is higher for cutting rates, even if economy and labour market weakens. Kashkari coming out basically saying all of this, a hurdle of changing policy, blah, blah, blah. Basically, all the Fed really are saying is they have no idea what to do. So from what it seems to be coming out as the general consensus, interest rates are going to drop worldwide. So everything down, basically, interest rates moving forward. As I said in this morning's live stream, if you're in there with the members, everybody cutting rates means that there is no bias long or short on any currency, because if they all cut rates, they are all weakening currency. If they all weaken at the same time, the market just goes sideways. So there's no real expected bias. The Fed have come out and said, again today, rates are going to come down when we're not sure. The EU have said they're definitely going to be doing it. Some of the fund managers now are looking at somewhere around about 1.5% by the end of this year, which means they're going to have to accelerate those cuts a lot. There's more talk about the UK dropping their rates as well. We've just had the rate drop this morning in New Zealand. So they've dropped another 0.25. So that's basically what we've got to look forward to. Interest rate drops, but no directional bias whatsoever off the back of that. EU adopts tariffs of 21 billion on US goods in metals disputes. So there's another hit back from the EU, putting 21 billion of tariffs back on the US. So that's China and the US basically retaliated again this morning. Corporation tax cuts in Germany, that's not really related to the tariffs. Policies tightening on its own, reducing the need to hike. We will impose first countermeasures against the US tariffs on the 15th of April. There we go. So there's the confirmation of what we were looking at, what I was talking about this morning. 15th of April. So that is, where are we? The 9th. So that is on Tuesday next week. We will get the first bout of retaliatory tariffs from the EU. So good and bad news. We've got to wait, which is the bad news. But the good news is the market might stabilize for a little bit. We'll have to wait and see. So we might find that we just go into a little bit more rangy conditions while we're waiting for that, because that is the biggest tariff announcement that we're going to get against the US, the EU. China obviously has done theirs, but that, we know that one's just tit for tat. So every time one puts one up, the other one puts one up. That's not going to move it. It's going to fluctuate, but it's not going to give it any directional bias, because all it's doing is making everything more expensive. Well, the only thing we'll do is crash the market, but from an FX perspective, it won't. Near-term neutral rate, blah, blah, blah. Sorry, this is all new that's come in since I last looked about 40 minutes ago. So I'm just whizzing through it. Traders now see June, not May. There we go. So we're all caught up. Oh, Trump's awake. Here we go. So this is a great time to buy. Buy what? Stock market? Stocks? So you crashed. So what you said is, I'm definitely not crashing the market on purpose. Now's a good time to buy, everybody. I've crashed the market. Buy it. Don't buy it, mate. Right, so let's have a look at what the markets are doing. So US, we have got a trade long on the Dow this afternoon. A little bit of a tight 5-minute range on the NASDAQ and the S&P. So no trades going on there at the moment. But Dow break long. So we'll see if we get any momentum to the upside on Dow. So looking at the upside for that today, Dow, obviously there's yesterday's high. I've taken ADR off the chart for the minute because there's no point in looking at average daily ranges because they are all over the place. So we could look at the average daily range for the last 3, but it's pretty simple, isn't it? You can see it on the chart. That's the range from from Friday last week. That's Tuesday, and that's Monday, and that's Tuesday. So the ranges are the same basically. So upside easily potential to get up to there because we've double bottomed so far today, which is the bottom from Monday. So we're holding the low of the week at the minute. So upside target should be achievable somewhere up in this area today, assuming that we go for that rally. And it certainly looks like the Dow is rallying, but Trump's awake. So, you know, it's only going to take one comment, isn't it, for him to either pump it or dump it. So we'll see what happens. So other than that, today, New Zealand rate came out this morning, 3.5 as expected. If you look at the New Zealand dollar today, not an awful lot, really. We got a movement on it, but nothing dramatic, really, today on the New Zealand dollar. Market obviously dropped slightly on it because it is a reduction in rate, so it will weaken the currency slightly. But amid what's going on at the moment and the massive drop that we've had on the Australasian markets, I'm not surprised it didn't really go far on that drop because the market, if it had factored any drop in, it obviously the day before with all the news about the tariffs, it completely destroyed it anyway. So nothing much happened off the back of that. UEDA spoke this morning. Nothing really came out of that either. And this evening, we've got FOMC meeting minutes. So this is going to be, I mean, Kashkari's talking, I don't know if he's still going on, but been talking this morning. So, yeah, I don't really think there's much that's going to come out of that this afternoon or this evening because they are just going to say the same, aren't they? Likelihood is if tariff wars continue, interest rates will need to come down to stimulate spending and stimulate business growth. But business growth is not going to happen because the tariffs are too high. So as I used as an example this morning in the live room, the iPhone 16 cost £700 last week in the US. Now today it's costing you £2,000 in the US. Okay, so it's gone up by over 100% because of the Chinese tariffs. China, and that was before the 85% extra just gone on from China. So I don't know what impact that's going to make, but look at maybe spending $3,000 on a phone now instead of less than $1,000. That's basically what's happening. So as long as that's happening, business growth isn't happening. Therefore, interest rates are going to have to come down. This is equivalent to COVID, basically. So the interest rates all dropped down to zero when COVID happened because they had to basically stop the economy collapsing. Trump is collapsing the economy. So the banks, the central banks, are looking seriously at accelerating that interest rate drop. But he can obviously, like I said, it's changing every day. So it can change literally on a dime at the minute. So we'll wait and see what happens. But just keep, obviously, your eyes peeled on the news feed. Which reminds me, the news feed in the Discord channel has stopped working. On the 21st of March. They normally put an advert in here about getting it. There you go. I'll have to do that again because for some reason my financial juice feed has stopped working in my channel. But anyway, that's for another day. Dennis, hello Lee. I wrote you this morning on Discord. Test result. I've answered everything on Discord. I have nothing on Discord to answer, so I've obviously answered you already. Did you change your ADR periods on ORB? So yeah, so I was on 3. I said this morning I've changed it back to why have I not taken trades there? Valid stop loss? Valid stop loss or TP? What? 17040 on the NAS. Sorry, bear with me a second. And 17124 stop loss. Oh, it's a sell stop. Hang on. So the buy stop. It's weird. Why has that got an invalid stop? I'll have to have a look at why that has got an invalid stop on it. That's weird. Why's that? Sorry, bear with me 1 second. There's no trades on the S&P. It's just the NAS. Okay. That's interesting because that candle closed exactly on the high there. So for some reason, because that candle closed exactly on the high, it was trying to place the order as price pushed above, so it couldn't place the order. Because I've got logic in there which basically says you've got to be below the high of the last candle to get the order placed. So I suspect it just touched up, which means it can't place the order. So it's got an invalid TP or stop loss on it because it's closed right at the highs there, unfortunately, but never mind. So Dow's pulling back at the minute. We'll see if we can get a break on that. So I had changed to ADR3. As I said this morning in the live room, I've put it back to ADR10 today, just to test, to see whether or not we get some trades in, basically, and we are. So because if you look at what's actually happening at the moment, so with ADR3, you're trading the range of those 3 days. With ADR10, you're looking at that, and backwards. So the ranges on those days are roughly that. Then we've got these days where obviously we've got this huge expanded volatility. So by going back to ADR10, what we're doing is we're taking in sort of 4 days worth of large volatility and 6 days worth of normal volatility to give us a kind of average, because I think potentially these big down days, these big movement days that we've had are probably going to start to normalize a little bit now, because the market's done the initial dump. So I think I still think ranges are going to be higher, volatility is going to be higher than normal, but I think it's going to be lower than we've had. So moving back to ADR10, I just wanted to see today if it would actually get some trades in. It is still struggling a little bit, as you can see there. So we might get a trade on the 30-minute range today. But yeah, so I've just gone back to 10. I don't know what's right to use in this market. This is a new market. So, you know, what's best to do, what's not best to do, don't know. There's no point in worrying about, oh, I should have left it on this, I should have put it on that, I should have done this, should have done that. Just do whatever and it will or it won't trade, basically. What's best to do at the minute? No one on this planet knows what's best to do at the minute. It could be absolutely anything, couldn't it? So yeah, I'm back to 10 at the minute. I moved it down to 3 because obviously the big movement, we needed to sort of filter everything out and concentrate on the size of the market at the moment. If I'm wrong about it calming down and we're still going to get like huge days going in, then probably back to 3 is the best thing to do. But you know, it's very, very difficult at the moment to know what to do with this. You know, sitting on your hands is probably the best thing to do, and just watch the nuts happen. There's opportunities to make a lot of money, but there's opportunities to lose a lot of money as well. So, you know, anything you do has to have realistic stops based on ATR, really. One of the things I think is possibly the best thing to do at the moment, and you can't do it with the ORBEA because it does use the daily range, but using ATR for placing your stops is not a bad idea at the moment. So use, when you've got an open like this, when you're about 15, 20, 30 minutes into the open, use the last 3 to 6 candles and look at how big they are and just use normal distances on that and adjust stops accordingly. It's not a bad thing to do. It's obviously manual intervention, but at the minute, you know, it's impossible. It's impossible to tell what the best thing to do is. We just need to wait for this all to calm down a little bit. I'm in on the S&P, NASDAQ, and Dow. Excellent. I'm not. This is the difference between brokers. You know, sometimes you're going to get triggers. Sometimes you're not going to get triggers. Some of the spreads, Tom Hugard in his channel, he's been doing... asking people for the spreads that their brokers have got at the moment. And some of the spreads on some of these brokers is unbelievable. I mean, not tradable. I'm on Global Prime here. They are tight as anything. This is one of the reasons I use Global Prime. Their spreads are very tight. And they're still very tight in all this volatility, although I have had some fairly big ones on the FTSE, but the FTSE's always got higher spreads than everything else. But some of the brokers at the moment, the spreads are just off the charts, literally. You literally can't trade it. So you're going to get very different results from broker to broker at the moment with EAs, because some of them will honour orders. Some of them are putting higher leverage on at the moment, so you've got to have more leverage available, more margin. Some of the brokers' spreads obviously are much wider than usual. There's been reports of platform freezes. You know, it's just such a chaos, isn't it? It's fun. Afternoon, Chris. Mine did not either. I think it already moved too far above. Yeah. So you get this is one of those anomalies. One of the reasons I put the logic in into the EA to ensure that the price is below the high of the previous candle is so that in a high volatility, and this is obviously now is about as high a volatility as you can get, but in a high volatility move, you're not going to get orders triggered. What I didn't want to happen was it to trigger limit orders. So the old version, if you were, and this is one of the reasons this is here, if you closed on the high on the old version, by the time it's got the order placed, sometimes prices moved above, which means it places a limit order. So it will move off, come back, trigger the limit order after a rejection, get you into a long as market structure shifts the other way. And there was a lot of losing trades happening because of that. So the idea behind the new logic is very simple. If we close on the high, the next candle, we have to be below to enter a trade. So it won't get in there. But I've not seen that error message before. It's just how MT4 reports it. Buy stop did not trigger for the S&P? No. So yeah, again, it's going to be broker dependent. So Dow, I'm just going to just look at levels on the Dow for that partial, because if we break, yeah, I'm going to move this up today. So I'm going to go there with my partial close. So these highs here and that low basically is a support resistance area. That's the open from yesterday in Globex. So if one or two things is going to happen, we're either going to reject this high and it's going to come back down and stop me out anyway, or we're going to break this high. If we break this high, I'm looking for where we're going next. So for me, the logical areas to target are here. So somewhere around there to the upside. So if I put the partial close there, if we break this high and we pop, I'm looking to get out somewhere up there with 75% of the order. And then I can obviously try and pull back to go for a target up at the highs. Yeah, I mean, I'll probably just leave the TP there because that's a hell of a long way. But as we know at the moment, it's only going to take Trump to say one thing and that thing will be gone. So yeah, so basically we did look at FX this morning a little bit, but the difference between ADR 10 and ADR 3 at the moment is obviously completely nuts. The Swiss franc is still being rallied today. So safe havens, Swiss franc, yen, still bullish. So there's a lot of movement coming into the Swiss franc still. We're still in massive fear mode at the moment, although it is, like I say, it is starting to look like it's calming down a little bit. However, obviously, it only takes one more thing. And as I said, we've just had today that new China announcement. So we could be looking at another rally into the safe havens today. So Swiss, just see what the Swiss is doing. Yeah, I mean, it is, again, another rally into the safe havens today by the looks of things. Well, it's difficult to tell. Lovely flag break short there, look. Trailer pending, sell stop underneath each of the candle lows. As soon as one of those breaks, we're off. Oil, I covered this morning as well. Absolute collapse on oil this morning. Again, so yesterday oil price, well, this is last week rather, oil price dropped. So far this week, dropped again. Little bit of recovery going on potentially at the moment, but price of oil got down to $55 a barrel. We were trading at 72 last week. Yeah, so 20% plus oil gone. Absolute catastrophic. And obviously the stock indices we know about. So there's not much point in doing any analysis on FX at the minute because, you know, you need to take one or the other stance. Is the move over and are we going to mean revert? Or is this just the pause before the next round of tariffs and the next collapse in the stock market? And if that is the case, how far is it going? Yeah. You know, that's the game at the moment. And guess how far the stock market's going to collapse. We've done. So this is basically April 2024. So that is an entire year, and we've got rid of 50% of the year within 5 days. So yeah, I mean, when you look at collapses and compare this to COVID, this is probably worse, isn't it? So if you look at COVID, obviously what happened was a complete V-shaped recovery, because we knew what was happening, we could plan what was happening, and it wasn't a case of the entire world is going to be destroyed. Businesses will reopen, they're just going to restructure. Right now, businesses haven't got a clue what they're going to do. As I used as an example on Monday, my mate's business, he's got 68% increase in costs on his business because he imports and exports. So, you know, his business basically is 68% worse off. Businesses aren't going to survive this. So a lot of these stocks that you see in the S&P500, the Dow and the NASDAQ, some of them are going to drop out. Some of those S&P 500 stocks are going to drop out the index and be replaced by something else. But everything is weak at the moment. So there's absolutely no faith in stock markets whatsoever until Trump comes out and says something bullish. So when that will be, we'll have to wait and see. Who knows at the minute? I don't really want a tight trailer on this today. %. Even 20% might be a bit tight. We'll try it. I'm just going to adjust my stop to 20% of ADR. Obviously, ADR at the moment is whatever it is, isn't it? But I don't really want to use a tight 10%, because if we do break this high, it's probably going to get there fairly, well, it might go parabolic, don't know, it might get there fairly slow. So I don't really want to be too tight on the trailer today. So S&P, we're inside the 15-minute opening range at the minute. So 30-minute range, well, 5, 10, 15, 20, 25, 30. So this is your 30-minute candle. So the 30-minute range is the 15-minute range. So that is your first TPO today. So break of the high or the low of that, although that range is, you know, it's bigger than 20% of the average daily range. What if I change this to a 3 quickly before that candle closes? Got 20 seconds, hurry up. I wonder if that will recalculate and actually manage to get us within a range. When's the calculation done in the logic? Should work. Yeah, so I can take a 30. So ADR 3 looks like the best thing to use at the moment. ADR 10 is still going to struggle to get into trades because it's a lower number. We've got a load of alerts going off. What's going on? Canadian dollar. Big strong move coming into the CAD. US wholesale inventories. Oh, that's just a 3 o'clock candle. Okay, that's all. That's right. But there is a big strong move coming into the CAD at the moment. A little bit of strength coming in on the US as well, but very, very strong Canadian dollar. Look at that. The Canadian dollar beating the US dollar down at the minute. So big strong move coming in on the CAD. I'm wondering if we're going to get some news come through in a second on Canadian dollar. Okay, long S&P, long NASDAQ. Market's rallying at the minute. 150% ADR, pound New Zealand. Is that the pound dropping or is that the New Zealand dollar rallying? That's the pound weak. A little bit of weakness coming in on the pound. A lot of weakness coming in on the pound. This is a 4-hour chart, so let's see where we're going on this. So that's not a bad target. Just check the NASDAQ. So fairly decent target, upside resistance for taking half or 3/4 or whatever you want to take. Afternoon, Christian. Long time. I've been here a long time. Is that the new ORB version 3.03? It is. This is in testing at the moment. So the difference between this and the 3.02 is this has a mode called portfolio mode. So we've got 2 new inputs in here. Where's the other input? Oh, I haven't downloaded the latest version. Anyway, okay, yeah. Could have sworn I put another input in. Anyway, so basically this has got a thing called portfolio mode. And it's also got now a maximum allowed money risk per trade. So this input here is related to if you're using risk or monetary amounts. So it will use the loss recovery system up until a maximum value rather than a maximum lot size. And there's also a mode called portfolio mode, which says use loss recovery on any symbol the EA trades. So the way that the existing version works is it will take a trade on the S&P 500. If that stops out, it will log the last result for that instrument only, and it will use the loss recovery system instrument by instrument. So each instrument uses its own loss recovery system. Yeah. So you could have this one clean breaking and never changes the lot size, never goes into loss recovery mode. The S&P goes up, down, up, down, up, down, and it will incrementally increase its size to regain the losses on the instrument on the S&P 500. Portfolio mode takes the last traded, the last result from any instrument traded with the EA and adjusts all of them to use a risk to recover the last traded loss rather than the last traded loss on individual instruments. So if you're trading multiple instruments like I am, it treats the account as an entire portfolio rather than just concentrating on instrument by instrument. Yeah. So the idea is if you get a stop out on the S&P, a stop out on the NASDAQ, you've taken 2 losing trades, the Dow will try to recover the losses from the S&P and the NASDAQ for you on a clean break, rather than the Dow just closing out and making money and then relying on the S&P or the NASDAQ to do it tomorrow. Yeah, so it should gather the profit back a little bit quicker. The downside to it is it will increase lot size a little bit faster because it's taking it trade by trade rather than day by day. So there's pluses and minuses. We went through in the live room this morning for the members stream. We went through lot multiplication in more detail. So I created a spreadsheet here. So I went through this in more detail and the impact of lot multiplication and how different using a 1.1 loss recovery system to a 1.3, for example, the difference in your account. Yeah. So when you're working trade by trade in a portfolio, this will happen faster, but the recovery will also happen faster. So in volatile times like we're in at the minute, recovering losses quicker is a better thing to do, because you've got more volatility, you've got more opportunity. More opportunity means you'll get out faster. There we go. So there's a great example. So I'm going to stop out on the Dow. NASDAQ has just pulled back and stopped out. So it's logged a $578 loss. So next trade on any instrument taken will be 665. So it's ever so slightly increasing the risk to recover that loss on the NASDAQ. Yeah. Only if obviously it places a new trade. So at the moment, it's got pending orders on here. Those won't change. They will stay the same. So what it's doing is it's trying to get in. If it stops out and goes the other way, this trade will try and pay for the one that's just lost. It won't try and do a loss recovery. Tomorrow, it will try and recover the loss, if necessary. It's going to be a losing day today, unfortunately. First one for a while. This market is just choppy. It's far too choppy. It's far too difficult to gauge any size on this at the minute. So yeah, down day today, 3.5K. Still got an opportunity to recover some of it. If the market breaks short, I'll be able to recover some of that loss, but it is so choppy. The DAX this morning got chopped to death, absolutely chopped to death. You can't trade this. This is not a breakout. This is just nothing. It's just awful. So you watch that, stop me out, and then fly 5 ADR. So yeah, got stopped out on everything today. Just absolute shocking session. But it's the first one in 6.5 weeks, 7 weeks roughly. So I'm happy to take a couple of losses because, you know, you can see the account. It's been win after win after win after win. If you do any back testing, you'll know that the back test doesn't go like that forever. It goes like that. Yeah, that's this week. Nothing you can do about it. It's just pandemonium. So you've got to take the hits. And today's going to be one of them by the looks of things. So there are a lot of recovery options today. So the DAX, obviously, the S&P, if it does break to the downside, I'm just going to move that that partial down in case we get just a sweep of the lows and then it pops back up again. And obviously that will generate more profit. And same for that as well. So yeah, downside targets, just see if we can get a break to the downside, and that will just recover sort of half maybe of that, maybe a bit more. Yes, tough day. Just one of those days where you just need one trade to work. Nothing's working today. It's just chop, 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 chop. It's a range trader's dream today after so many parabolic days, but it's early in the session, so it could well break still. But if it's going long, it's not going with me. When the new version is available, will the activation work? We just download the new version, yeah. Evil, I told you this Monday I've started testing ORB V3 on live market. You can expect this kind of market as long as I keep trading it. Yep, always the way. As soon as you go from demo to live, the market goes, not going to do that anymore. It's normal. Just stick with the edge. It will play out. It's just a case of at the minute you can't do much with this. It's one of those, you see this in back testing. You get days go past where it just stops out, stops out, stops out, stops out. And it does this for days. And then it suddenly goes parabolic for days because it's an accumulation phase. Yeah, breakouts don't work in accumulation. Simple as that. Mean reversion works in accumulation. But if you know what today's going to be, you'd know which strategies to trade. If you knew that, you'd be a millionaire, but you're not. So we have to sit through this. It's just part of the game. Getting chopped up, and unfortunately the frustrating part of the game is often it's just pulling back by 20%, 10% of ADR before it's going. If you put your stops at 30% of ADR, it will pull back by 30% and then it will go. It's just nothing you can do. You can't fine tune it for the market because you don't know what the market's going to do. What I'd love the market to do is for Trump to come out and say, I am putting 50% tariffs on Europe just in case they come back with something next Tuesday that I don't like. Boom. And then that will be green. But, you know, this is what it is at the minute, isn't it? It's a case of waiting for Trump to open his mouth. That's the job. And if he doesn't open his mouth, the market sits there scared to death and waits for him to open his mouth. There's no fear and greed index today. I was just scanning through to see. We haven't had one, have we? Did we get one yesterday? I'm interested to see what the number is because it was down at 4. We looked at that this morning as well. Utter chaos. Look at it. Normally, this is like, this is strong, this is strong, this is weak, this is weak. This is around about the middle. Everything, look. Boom, 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 boom. No idea. No idea what anything's doing. It's all crazy. It's all good fun. But yeah, we've got no fear and greed index. I don't know why. I'm wondering if because it's down at 4, it doesn't go any lower. So they can't actually put the fear and greed index up because the market is so scared it's dead. I don't know. But there is, we're not getting one, are we? Going back day before here. When did we get the last one? It must have been Monday, surely. Like that's a normal, like normal. Today's chart. Panic. We haven't got one, have we? It's gone. Do you think they basically are thinking, it doesn't do it, it doesn't work anymore, it's broken. They've broken the dial. I'm back to April the 7th. I'm back to Monday. There is no fear and greed index. We didn't have one yesterday either. Look, that's it. Interesting. Tibor, hello. I hope you're well. Nice to see you still plugging away. Yeah, never stop. Haven't got a choice. Got a mortgage to pay. It was 4 yesterday. Or the day before, yeah. It was. I'm sure it was Monday. We looked at it and it was 4. It might have been Friday. I can't remember, but it was definitely down at 4. And I said, I haven't seen it at 4 before. It doesn't go down that far. It's just one of those things. It just does not go down there. 4 is a number that we very rarely see. This pound is melting away at the minute. Swiss franc rallying again. So this tells me that the fear and greed index is definitely down in single figures because this is what happens. Safe haven runs happen in fear, and that's exactly what we're getting at the moment. We're getting strong Swiss franc, strong yen, which means safe havens are being bought into. But the pound, for some reason, is really struggling at the moment. Not sure why I've got a New Zealand Swiss chart up there. Panic. Right, so we are starting to look like we may reverse here. As I said yesterday, or rather on Monday, support resistance is very hit and miss at the moment. So when you look at how the market typically tends to move in market structure, at the minute we are getting movement from support resistance zones like this bounce that we're getting at the minute off of this previous support, but a lot of stuff is just not holding, so the market is getting pushed around a lot. I think there's a bit of a difficulty from institutions to get large orders placed at the moment because this is one of the reasons we're getting these big moves, because there is less liquidity in the market. It's harder to get orders filled, so if you have trouble getting orders filled, you have to push price further to get them done. So we're finding a lot more of that type of swingy movement happening, which is creating a lot of chop. But support and resistance, there's not really any real reason for this bounce here unless it's coming off of the accumulation from the end of yesterday, which is potentially correct. If that is the case, that's your market structure high, low, 50% retracement, drop. So, but it's, as I said this morning, again, in the live room, the difficulty with the ORB strategy or any breakout strategy at the moment is how it's getting there. So if it's breaking out it's not getting to where it wants to get to smoothly. It's doing that rather than that. That's a nice clean breakout. What we're getting at the moment is a lot of this type of price action where we sit around, we jump up, and then we sit around and jump up. This is you just get stop after stop after stop. This is the frustrating thing about stop loss strategies, isn't it? You keep forgetting it's not pulling back a percentage of ADR. It's pulling back exactly to where the stop is. Yeah. After all, the big banks sees all your stops. Yeah, of course they do. The big banks know exactly where every retail trader's stop is, and they use that as a stop hunt mechanism to take all the retail traders' money away. All 0.02% of it, I think, that is what we make up of the market. They are hunting us because that 0.02% is incredibly important to them. You believe ICT? That's how it works, because he made the algorithm, don't forget. Fear and greed probably gone negative. It's 4, John. If you found it, have you? I can't. I only ever find it on here. I've never actually looked for it anywhere else because it always just comes up on here. But yeah, wouldn't surprise me if it's still 4. It's quite hard to get below 4 because what happens when it gets to 0? That's surely the market shut, isn't it? You can't get any more scared than scared to death, which is 0, isn't it? 100% is absolute euphoria. Never been there. Never been to 0. So if we're at 4 this week, as if by magic, just checking for cameras. They're obviously watching. There you go, 4. Oh, so yesterday. Okay, so I didn't see the chart yesterday. As I said, I just scrolled through it. It wasn't there. Yesterday, we got to 3. That's bad, isn't it? So, yeah, we are back up to 4. So, yeah, a little bit better. Not good, obviously. Still hideously bad. But until this starts to get up into double digits, the stock market's going to find it very, very hard to rally. So, looking for longs in a market like this, very difficult. There's almost an argument for, in your terminal, popping over and setting it to short only, because you're going to find the longs are going to find it difficult to trade. But that'll be the day where it breaks long and goes 4 ADR, and we miss all that money. I think cable is headed back to previous accumulation, maybe. Cable is headed where cable is headed, and that depends on what Trump says. Nothing else. There is, you can predict what you like, but it's either going up or down. There's only 2 things it can do. It can either go up or it can go down. Predicting where it's going to go is irrelevant and pointless, because it will go where the market drives it based on what Trump says. Yeah. So if Trump sticks another 20% tariff on the pound, that's going to happen. If he takes 10% off and goes, we love you because of the king, that'll happen. Yeah. It's got nothing to do with anything at the moment. Interest rates, irrelevant. CPI, irrelevant. Unemployment, irrelevant. We know CPI is going up. Unemployment is going up. Interest rates are going down. 100% guaranteed. If this trade war carries on, those 3 things are happening. So there's no point in predicting market movement based on fundamentals, because fundamentals are clear. We know what's happening. Yeah, as I just said, the price of an iPhone has more than doubled. Yeah, that's inflation. Going up. The next inflation numbers are all going to be red everywhere. Tomorrow's inflation numbers, however, for the US could come down. But this will be the very last time you'll see that happen. They're not going anywhere else, because he's just put everybody's prices up. Apart from eggs, obviously. Have you noticed how many times he's mentioned what a good job he's done on eggs? Do you think he's trying to get the whole of America to buy eggs so that they can use them to pelt his car as it drives past? That's the only real reason to use eggs. Yeah, drive the price of eggs down so everyone can buy them to throw them at me, because I've made such a great job of making America great. Tom's friend David Paul was saying he likes to put orders where people put stop losses. Yeah. That's always been the case, though, isn't it? Because that's what market structure does. That's obvious. Market structure means that price moves up, price moves down. So if price is going to move up, where's it going to go? There. When it gets there, what's it going to do? Move down, because that's what it does. So yeah, if you sell above a previous high, that's a good strategy. It's called mean reversion. That has been the case forever, and as long as we have market structure, that will always be the case. Good luck trying to develop a strategy with it, though. Doesn't work that way. Because basically you can't obviously predict where it's going to go. And this is the thing. Like I said, I've said many times, everything you see on the internet, everything you hear, every course you buy is a recycled version of someone else's work from X years ago. Everything is repeated because the market can only do two things. It goes up and it goes down, and it moves through time. And as it does so, it makes either higher highs or lower lows, or higher lows and lower highs. And that is all it ever does. So if you think market is going to go up after it's broken a previous low, buy it. But if it becomes a propulsion move and you get a propulsion gap formed, you'll get stopped out on that buy. So you need to place a stop loss. So if you buy below a previous low, like everybody else is getting stopped out there, so you do the opposite, you've still got to place a stop loss in the market. And your odds are still exactly the same, 50-50, as to whether or not it's going to go up or down from where you enter. So you may as well just flip a coin. So when it gets to a new high, David Paul says, that's where I get in. His odds were exactly the same as my odds, 50-50, because it will either go up or go down, and it will either hit his TP or it will stop him out. So your job is to decide where to place that, and your job is to decide where to place that. Doesn't help you formulate a strategy. Flipping a coin is also a 50-50 probability. But David Paul is great. He's a great trader. Understood probabilities, basically. Right. So today doesn't look like there's going to be any profit, unfortunately. So the market's just stagnant at the minute. Obviously, Trump's probably going to say something at some point. And it will probably move the market at some point. Every day so far, we have had a very large move of some description. So, if you come out, there's a big move happened every day, basically, of some kind. Yeah. So this is where we are now. We're waiting for someone to say something. We're waiting for some news to hit. Until something happens, there's absolutely no reason for the market to do anything, is there? So we need someone to say something to make somebody make a decision. Someone will press a button and we'll be off. So, yeah. Are we going to try and stay where we are? In which case then running for the highs or running for the lows and bouncing is probably the order of the day. Is someone going to say something really ridiculous about what's just happened with the Chinese tariffs? If Trump comes out and says something like, we're going to put another 85% on China, we'll be out at the bottom. Yeah, so this is all you can do at the minute, is sit around and, I've been watching people trying to trade price action. The only person that's really doing any good in this are people like Tom Hugard, who just basically press buttons. Yeah, and they just use risk, and they make sure their reward is higher than their risk. But their strategy is basically, I'll have a go at. Yeah, that is what you're doing at the moment. Everybody that is trying to trade bearish engulfings and 3-bar reversals and all that sort of stuff, very hard because it's so choppy at the minute. So 3-bar reversals work beautifully. There's one. Lovely 3-bar reversal, and it works. But the likelihood is it will have pushed down, pushed up, stopped you out, and then gone, because it's that type of market. Highly volatile. So very, very hard to trade this at the minute. Support resistance works sometimes, but it's a tricky one. David, good afternoon. Had a work meeting. I'm late. That's okay. I'll let you off. Thank you very much for the $10. Very much appreciated. I'm actually just about to go off because this thing's stalled. But good news, David. The live rooms have changed. I don't know if you noticed, but we are now on every day, 3 days a week. Every day, 3 days a week. So we're doing Monday session and a Monday afternoon session, a Wednesday morning and a Wednesday afternoon session, this one, a Friday morning and a Friday afternoon session. So I'm here for 3 afternoons. So I expect $30 worth of tips instead of $10 worth of tips. Joking about the tips. But yeah, I'm doing three New York sessions. So the idea is basically to trade the open London and trade the open New York as well. And then I'm taking Tuesdays and Thursdays off to do development, programming, all the other stuff, strategy development, etc., etc. But right now, not a lot we can do with this. So just one of those sit around and kind of see if it goes type days today. If you wanted to, obviously, if you've got the ORBEA, and one of the things somebody's asked me about, who uses the old version of the ORB, what they do, which is not a bad idea in this type of scenario, so it's something you can play with, is when you get a market like this, your opportunities to trade are still there. So on the S&P now, we've got a new high there, we've got a low there. So that's 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes. So at the moment, if you look at the 30-minute high and the 30-minute low, it's there. So if you change these times to be, you know, sort of where we are now, which is 17.25 on my broker. So if you go 17.30 now, if you just change the time of this one to 17.30, what it will do, I get it in time, it's just about a minute, it will now reassess that last 30 minutes of price action, because we're not going anywhere. The open has been delayed. The market is sitting there going, I don't know what to do. It may sit there and do that all day, but we're an hour into session now. So this is the initial balance is now in. So the market will now be looking for a test of the initial balance high and low. So it's not a bad idea to bracket that second 30-minute of price action and see if that range is wide enough to try and get a trade off. Because if they try and trade down to the initial balance low and they go for a break of the low today, you can get in here. And then obviously you're going to get more distance out of it. If they're going to go for an attempt on the high, which it looks like they might be doing, but it also may be flagging to go for a short break, you can bracket that. So you have got the option in the ORBEA, obviously. Those numbers are not set in stone, these times to trade. You can adjust it. If you're seeing a choppy market and you want more opportunities to get in, that doesn't work, does it? Ah, okay. Yeah, and you need to refresh the EA. Those times only go on initialization. So you'd have to re-add the EA and change the times, basically. But you've got that option there. I mean, it's still valid. So you could change that to 35. It's worth having a another set file. So if you save that as like 1 hour attempt on the S&P, for example, you can then just reload the EA, load that set file up, and it will go for a crack at that range. But that's the way you need to do that. I'm not going to do it. But yeah, one of those days today. Do you have any interesting developments you can chat about in your coding? Not really. I code every day. So I have new interesting developments every day. Talking about breaks, how is the breakout portfolio EA going? Yeah, good. Up 35%. This at the moment up 26% this last 5 days. Had one down day this week on Monday. First down day. So that's the first. That is the first down day it's had since inception. So I've got this running on another account over here as well. So this is a baby account I started. This is running a slightly different variation of it, but the same strategy really. But I wanted to put this on another account. This has only got 1,500 quid in it, this account. So it's a very small account just for testing purposes. Because I wanted to partly test what would happen on a small account with gold and oil, because you can only take 0.01 lots with small risk. So yeah, it's had one down day since I started this account. The other one's been running for like 8 weeks now. We're down so far today, but obviously open P&L. It's not the end of the day by a long shot yet. Market hasn't even started. Look, we're not actually going anywhere at the minute. You're going to break long now, aren't you? So yeah, it's all going very well. But every day I'm watching this and trading this. This is ideally mimicking what I would do. I am still interacting with this every now and again. So, for example, now I'm looking at this Swiss yen thinking I need to take half of that off. Stalling out at the highs. Yeah, so I want to take half that Swiss yen off. So I am still intervening with it. And I think this is the type of strategy you still do have to intervene with. This is a fully automated strategy for getting into the market. For actually making money, that was all done full automation. That's all done full automation. That day was part automation. But I'm still pressing the button every now and again because I'm looking at it going, you're an idiot if you don't take some of that. So, you know, all my strategies that I trade. I don't do full automation, as you know, because I don't think you can. I don't think there's an EA that anyone can program that is going to run full automation with a brain. At the end of the day, gold is coming down. Every being in my body right now is saying, look at the speed of the drop here. If this gets back to break even, I shall shut that. I'm not going to let it take a $9 loss or £9 loss. I will get out. So it's a very hard thing running a portfolio strategy in a tester, because you can't, even in MT5, it can do testing, but there's points. I've got a version of this for MT5, so I've done portfolio back testing with it. And even I watch the portfolio back test and I look at it and go, right, we made, let's say, for example, we made an $80 whatever loss yesterday. I see it running up to a target of $150 and I see it get to $95. And I'm like, you need to close 3/4 of that and just get that back in the bank and try and get a runner. Yeah. So you need to shut 50% of half the trades and bank some because of this. And there's so much logic you see running past in the strategy test. You think that's what I would do. But if you code that into the EA, there will be times where you go, I don't think you should do that, because something will be different. You know, one down day in 2.5 weeks is nothing, is it? It's the same as the ORB strategy. Yeah, we've had 2 down days in, God knows, well, this will be the 3rd down day in 7 weeks. I don't know. But it's because the market conditions are not right. So when the market conditions are not right, you need to make different decisions. So I would be looking at this right now going, I need to bracket that 30-minute range because we are an hour into the session and the market hasn't broken. It is going to break at some point. So we need to be looking at re-entries here because when this goes, it's probably going to go pretty quick. And the reason I'm thinking that is because we're on a down day. If we're on an up day, I'd be having a different mindset going, oh, I've done $200. The market's in a nightmare today. I'm just going to walk away and come back tomorrow. But your mindset changes depending on what's going on. And this is what traders do. They adapt. EAs can't adapt. So I'm finding myself recoding the logic on this over and over because I'm thinking, I need it to do that in this instance. I need it to do that in this instance. Why on earth would it not do that in this instance? Like at the moment, we've reset risk. Shouldn't be resetting risks. We should be upping risk at the moment because the market conditions are accumulative. We've got a loss to recover. So we need to get some more size on because when it goes, we want to take advantage of that move. I now want to reprogram it to say, if you're down by X percent, like in this case, 5% on the day, do not reduce risk. Yeah, keep risk where it is because it is going to go at some point. Something's going to break. It's Wednesday afternoon. We've got oil numbers coming out. We've got oil as an instrument. So when the oil numbers come out, oh, they've changed it to yellow, haven't they? So we've got crude oil inventories coming out. Oh, they've come out. There we go, 2.6 mil. Just come out. Would be the one day that oil doesn't go. But, you know, these are the sorts of things that you need to sort of adapt to, basically. And that's why I struggle with EAs. Because I know that when I use an EA and when I put an EA out there, everyone's going to go, what's the best set file? I don't know. You need to understand strategy. You need to understand what it's doing. You need to understand what to do with it. That's the trouble I'm having. I'm trying to program it for everybody and it's not possible. So I find out I'm just going around in circles. I can release something, but what I'll do is I'll release something and everyone will go, but that doesn't seem to work in the back tester. It's like, don't use it then. Honestly, I can't help. You see what I can do with it. I'm not doing anything clever. I'm just letting the volatility go. This will do really badly in a range-bound market. So it'll go day after day after day with losses. And if someone starts using it on that day, they'll hop to something else and then all of a sudden volatility will kick in. It will start banking cash. But they won't be here. I can't help that. Do you trade the DAX? No. DAX moves in the morning. This strategy I do, but only if it's moving. See, this is the beauty of this EA. This particular EA is a breakout EA, and it uses volatility and volume as a measure. So while the DAX is doing this, it's watching it and going, I'm not trading that, it's crap. If the DAX starts to move because Trump says something, it will start trading the DAX. So you trade what moves. The DAX moves in the morning. So in the afternoon, don't tend to trade it. ORB, do not trade ORB in the afternoon on the DAX. So the DAX trades are done today. Yeah. DAX got killed today. We moved up, we chopped around, we died. We moved down, we chopped around, we died. We sat there chopping all day. We had one move go in, then we sat around and chopped everybody to death. And now we've just come back inside the open and we haven't gone anywhere all day. You don't make money on that type of market. Yeah. So this is not being traded this afternoon because it's not moving. But partly because this isn't moving either. Nothing's moving. Look, the algos is literally just sitting here, accumulating. What comes after an accumulation? Yeah. When are they going to press the button? But they will press the button. So, you know, that low there, that low there, that high there. Somewhere around there is going to be a great breakout today at some point. But it could chop down to there and then chop up to there and do that for another hour and a half, 2 hours. They might move it an hour before the close today. Who knows? I haven't been here for a few months. I'm not position trading gold. No, I'm trading gold as a breakout. Yeah, because it's a scalping strategy. I've never had a problem with scalping gold, but I have never been scalping normally. So this is a different strategy. So this strategy is a portfolio strategy. So this one EA trades multiple instruments. It trades all of these instruments, and every single one of those instruments is an uncorrelated, separate instrument. So we've got indices, we've got commodities, we've got commodity pairs, we've got US pairs, yen pairs, Swiss pairs, pound years, euro pairs, but it's all uncorrelated. So there's seven FX instruments and 3 indices, gold and oil. So we've got complete portfolio diversification in there. So it doesn't matter what goes. When it goes, we're on it. So we sit around waiting for stuff to go. If it all goes at the same time, we bank big. This day here, for example, look. Yeah. Everything moved at once. Took it all. Great. But, you know, days like this, you're gonna struggle because it's a breakout strategy. It's momentum volatility breakouts. If there is no momentum and no volatility, strategy's not going to work. So you sit through days like this and just do nothing. Like this, look. It's just chopped today. It's just oops. Just a load of crap. It really is a load of crap today. There's a lot of movement going on, but you know, it's just like, you know, you can't trade wicks like this. Just kills everybody. It's horrible. Anyway, so that's really all I got for today. There's not really much else to discuss because at the minute, I think we are just waiting for the next retaliation to come through. Unfortunately, Euro isn't going to be until next Tuesday now, which is very annoying because that was the main next movement I was expecting. So if we're going to get that next Tuesday, oh, hang on, some more news just coming. So if Euro is going to retaliate next Tuesday, we've just had China hit back with retaliatory tariffs. We've got some someone testifying now. Okay. US weighs farmer bailout as China retaliation threatens exports. Yeah. Again, how is this helping Trump? How is this helping? So you're trying to make America great again, but what you're actually having to do is spend a load of money bailing out your businesses because you've screwed them by putting tariffs on. Expecting what? Not to get tariffs back? Amazon cancels some inventory orders from China after tariffs. Oh, what's going to happen to Amazon's stock price? Cancelling orders. Turnover down. Profit down. How is it helping? Crude oil inventories doesn't mean you make any difference at the moment because crude oil has already collapsed. US imposes sanctions on enablers of Iran's nuclear program. Well, that's fine. Don't mind about that. But yeah, so unfortunately, because we're waiting around until for the Euro tariffs, I think we're probably going to be a little bit sideways. So again, don't forget flat is a position, long, short and flat. So being flat at the moment is not a bad place to be because you know, when this is all blown over and the market returns to normality, we're going to see some nice climbs hopefully start to come back in at some point. Or we're going to see continued declines, but hopefully market structure will come back rather than parabolic moves, and that's what we're waiting for. So just in case it's sitting around until then. So I'm back on Friday. What we'll do is we'll look on Friday at the we've got 2 sessions on Friday again. So I'll be trading the DAX and the FTSE on Friday morning. We'll trade the US Open Friday afternoon. And the Friday sessions are basically kind of Q&A. So it's basically a case of looking at anything you want to look at, really. Strategy, systems, questions, what's going on. But I'll obviously do a recap of what's happened this week and what we're expecting. to come. So it's just a case of preparing at the moment and trying to decide what to do with indicators and everything, because everything is in a complete sort of mess, isn't it? So all right, so have a good day. I'll be back on Friday. If you need anything, I'll be in Discord or Telegram if you need me in there. And yeah, watch these ranges, because I think there's a good chance today of getting a decent break on these. So it's something you're going to need to do manually, but you can see what we're doing. Yeah. So hopefully one of those will send us off at least half an ADR. So there's an opportunity to try and recoup some costs today, but bear in mind, we could just do that and kill you again. So just be careful. Have a loss limit set. I've got 5K on mine, so can't lose more than 5K in a day. So be careful out there. All right, so have a good day. Anything else you need, let me know. Other than that, I will see you next time.